For silver, there is a number that is far more important than price, and the clock is ticking on that number as we speak. But there's another number that I want to make you aware of as well that could bring things into alignment. I'll explain what that is as we explore. Silver. They can't print it. They can only mine so much of it per year. And this is why that the natural order of things comes into play with hard assets like silver and gold. I think that's one of the most amazing things and the best arguments that we can make for holding this metal. It has been money for thousands of years, a store of value for thousands of years. And this is in spite of price fluctuations. This is why this series exists. What am I talking about? We're talking about the dollar to silver ratio. That's right. We have three different numbers we're looking at here, but the one that is most urgent is the dollar to silver ratio right now. And we're going to get in and I'm going to explain exactly what this number means, because this is not a price, it's a ratio. If we look at it over the course of 5 years and 10 years, you can see that these numbers are getting close to each other. In fact, from 10 years ago, it's pretty consistent with what it is right now. Obviously, over the past 5 years, that spans the pandemic, which is when we saw it explode to over $5,000 per ounce in terms of the dollar to silver ratio. And I have a whole playlist of these videos, which is worth looking back and seeing what it was like during those times, during the dollar to silver ratio and how much money they were printing, because that's really what it boils down to. We're going to look at this from a different level here. We're going to go back and check it out and see exactly what this means. When we highlight these numbers, we get an explanation as to what they mean, what they are. And over here at the debt clock, we can see that the dollar to silver ratio is the year-over-year increase in the U.S. M2 money supply divided by the yearly world production of silver in ounces. And this is sourced from the Federal Reserve and the USGS. So I think they've done their homework on this, and it gives you some insight as to what's going on here. In other words, there are that many dollar bills, $1,149 bills that are printed, or more likely digitized, for every single ounce of silver mined per year. That tells you something. Now, for a while, after inflation heated up and the Federal Reserve raised interest rates, well, you saw that number go back to zero because for all effective purposes, they stopped printing. The monetary system had contracted. The monetary supply had contracted here, and we can see that laid out from this chart here from the Federal Reserve Bank of St. Louis, and this gives us some insight as to what's going on with the money supply. Since 2020, we can see how it spiked up dramatically in 2020, and then it had contracted a bit. And now we find ourselves here at this point in time, in 2025, where it has started to increase from about October of 2023, when essentially they kind of had stopped raising interest rates and paused, and then they lowered them to kind of get the economy going again, because employment was kind of going back up again, and there was some issues with the economy. So the Federal Reserve tries to interject, and so they are now sending more money into the system. But that money into the system is not just from what the Federal Reserve is doing to try to stimulate the economy, but it is also what the government is doing by legislative efforts to increase money supply by spending money. And that's what causes the increase in money supply. The Federal Reserve really has no choice but to spend those dollars, because there's not enough taxes you can accumulate in order to meet the needs of what the legislation calls for. And a lot of that money is still being spent now, even though there are some efforts by the current administration to try to scale some of that back. A freeze, or a pause, if you will, of spending until we can work things out. Some of the legislation, though, calls for more spending. So what does this mean? I guess they have to, unless they can repeal those bills, that's going to continue happening. And the data that we have near here just goes till December of 2024. As you can see, it is still expanding. So that is where we're at. So it has not been adjusted yet for the new administration. Likely that may come, soon. But this is where it stands right now. And this is quite something to see that amount of money being spent. And it's just upticking here, the dollar supply that has been added. So this is why this number is actually increasing from where it was before. But there's a hope that they can dodge the bullet with the debt and maybe bring it down a little bit to the tune of, a couple of $1 trillion if possible, if DOGE has its way. Here it is right now. The national debt is indeed at $36.4 trillion. And it's ticking away and climbing up dramatically here. But if we go back out a little bit here, we can see the DOGE clock. This is a new number here we're looking at. And this is interesting. It almost seems somewhat arbitrary for this amount of number here. It is a 45, it's at $45 million there, or $45 billion, I guess, rather. And that is the Department of Government Efficiency's Advisory Commission Real-Time Savings Objective from reducing government waste, fraud, and abuse in federal government agencies. Wish them all the best because there's a heck of a lot of it. There is a running tally that they've been giving, and they hope to be able to, do about $4 billion, I think, a day or what have you. If my memory serves, I'm not looked it up, but that is what they want to do to be on track. And if they do that, it would still leave $1 trillion added to the debt over the course of time. But at least it's slowing down the pace dramatically of $1 trillion every 100 days. And so it's actual cuts, but still there's a lot of money out there that will be spent. It is a massive organization, the federal government is. And this DOGE clock is just real-time savings objective. In other words, that's where they want to go. It does not mean that they're saving this much money right now. I think it's going to take a while. So people have false hopes and thinking this thing is having an impact. But you can see here, this number is going up, but so is this number. That's right, the U.S. national debt, which means federal budget deficit here, $2 trillion. They hope to pare that down, which means spending will still go up. There's massive reductions needed all across the board in the federal government. It's gotten way too big. The administrative state is entrenched, and it's going to take quite some time to be able to root it out. And a lot of it probably will require legislation to make that happen. Notwithstanding, it is kind of a dodge, if you will, with DOGE to try to bring these numbers down to reasonable levels. And hopefully economic activity can bear out the difference so that even with some tax cuts, we may see the federal revenue actually increase because of that, which is exactly what happened during the tax cuts of 1982. By the end of Reagan's term, 2 terms in office, revenues had approximately doubled or almost doubled. And we could see some of that happen again if there's real stimulus in the economy by actually unleashing the free market with lower regulations and the like. But notwithstanding, this is an important ratio to understand here. And if this number were to go down naturally through actual cuts in government spending, it would make the zero that we saw before look like it'd be something really substantive to see this number actually go down, even if it's not zero. Because there are dollars that will be interjected into the money supply based off population and economic activity, which is slightly different than just printing it to spend money from the government. In other words, have enough money as a supply to keep up with normal economic activity that doesn't involve government. There's a very big difference there, and it probably doesn't require a whole lot of dollars. Will they contract some of this money supply? Hopefully they will, but I think that's going to require probably raising interest rates yet again, which the Federal Reserve is likely not going to do. It's not anywhere in their cards. It would be a shock and surprise if they were to do that. Obviously, the price of silver is much different than the dollar to silver ratio, and many people feel that because of that, it is grossly undervalued. And you can make a case for that. It's undervalued, but at this time when the value of it is lower compared to gold and compared to this dollar to silver ratio, well, you make your own decisions as to whether or not you think it's a bargain right now. But if it is, well, do your research and check out stackable silver from summitmetals.com. They have a good selection of bullion products. You can see here, stackable silver products over at summitmetals.com. And they also are starting a new thing here called gold silver swap. I encourage you to sign up for that to get early access. And this is a marketplace for buying and selling precious metals peer-to-peer, goldsilverswap.com. But silver is certainly a metal that is intriguing to us all in terms of its uses, its variety of uses. And right now, there is fear of tariffs coming or being implemented. They are in effect right now. But how much impact will it have on the silver market in terms of causing prices to go up? Well, we don't know yet. But there's a lot of fear out there and a lot of silver coming into the United States because of that. And mostly this is industrialized bars and the like, or good delivery bars. Notwithstanding, coins, rounds, and bars like what you see here, well, they are indeed readily available for you at any time with relatively low premiums for sure. And this is a good thing for us. We can accumulate and without a whole lot of premium. I mean, there's still some premiums out there, but it is nice to be able to have it available to us when we need it because a lot of people are selling it right now. But nonetheless, so that's what it is, and this is the latest in an update in the series that I'm doing. Hopefully, we'll start to see some of these numbers go down. It would be nice to see that debt clock actually tick backwards. Might be nice to see a dodging, if you will, of the debt. But I think we're not going to see that. And we would like to see this number. If we could see this number go backwards, oh, that would be great. That means we're spending less. We're not spending more than what we're taking in. That's what a deficit is. It's deficits alone that lead to the national debt. And of course, the interest on the debt is big too. You think about it, how this plays out in the course of history. This number here, the U.S. federal debt to GDP is astronomically high, and it's insane. So hopefully we can get that fixed soon, but it's going to take a while. But hopefully we can just get it fixed in due course. And the DOGE has until July 4th, 2026 to be able to make all those cuts. We'll see what happens, but there it is. In the meantime, what we can do is we can accumulate that which is limited per year. In fact, there's a structural deficit in silver that's being mined per year compared to what's being utilized for industrial uses. So every ounce that we pick up and we have and add to our stack means that we're in a better place of being able to protect our wealth over the long course of time, and that's what it's about. It's not about getting rich or anything else. So there you have it. So let me know what your thoughts are about silver and the debt clock and the new DOGE portion of this as well. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch this video, and to encourage you to please rate, share, comment, and subscribe.